All right, thank you. So our next speaker is a geologist and mineral economist with 25 years of experience. He's the managing director and CEO of the coolest named company, I think, at this conference, Hot Chili. So I guess he's going to talk about beans. I guess that's the natural resource word. Christian Easterday, CEO of Hot Chili.
Thank you very much for attending what is becoming an annual tradition for me in updating Rick and all of the investors here on the progress of Hot Chili towards building one of the world's next large-scale copper mines. This is becoming a very rare feat in the industry. We have a handful of projects outside of the control of the majors that are able to be meaningful and impact supply this decade, which is becoming extremely important for decarbonisation and what's going on in the world to electrify everything and certainly rewrite the demography of copper usage for the decades to come. So to summarise what I'll be presenting today, we've just delivered a major milestone for the company. We've, for the first time, put economics on our large-scale production hub that we've been developing on the Chilean coastline. And that has demonstrated one of the lowest capital intensity projects available in the world. Some very strong economics that were in parallel endorsed by a significant investment by Osisko Gold Royalties of Canada to the tune of about $15 million US. So that is closing over the next 24 hours and will be announced shortly. But what we'll be taking you through is now, for the first time, what Costa Fuego looks like within the pecking order of major copper developments and what this really ultimately offers investors in front of potentially the third commodity of the 21st century to experience conditions which drive 10 times re-rates. So moving into the presentation and just really summarising what we have. We have a top 10 undeveloped global copper resource, some 3.4 million tonnes of contained copper, 3 million ounces of gold, and most importantly now, very strong economics and demonstrated leverage to this oncoming copper deficit. The low-risk aspects of the project, which I've been discussing for many years. Why will low altitude be a major impact on capital and operating costs? Why will infrastructure that is built around the project and being next to a port, why is it important? All of those things have now come together to demonstrate not only strong economics, but one of the lowest risk projects in the development pipeline outside of the control of major miners. The next growth phase is fully funded without a share being issued. We started to now put the market capitalisation versus the project economics and rearrange that in order of how we finance going forward and how we drive leverage for our shareholders through managing dilution. So what this funding from Osisko has done has meant that we've put the project value to work rather than the share base of the company, and what that has meant is that we now have 12 to 18 months of full funding to be able to submit our environmental impact assessment, or effectively our final step in granting access to be able to mine this project in the coming years. So with that application and a pre-feasibility next year, we will be very, very well positioned for 2025, 2026, where ultimately we see a major pinch coming for the copper sector. From the biggest bear in the market, about 4.8 million tonnes of additional copper supply required by 2030, to the biggest bull in the market, another 9 million tonnes being required. This is a 22 million tonne market. There's another 2.5 million tonnes of scrap. That's very, very significant when you consider that we haven't been discovering deposits or projects of this size for 20 years. Grades are declining, and ultimately we have a gap of some 4 to 5 million tonnes of additional copper supply, which is unaccounted for. And the last time those conditions were prevalent in a sector which has most of its supply associated with large capital projects, long 20-year timeframes to development, the laws of inelasticity take over, and you can be assured that we are probably going to see quite a dramatic increase in the copper price over the years to come. So this project becomes a project that is important if you're looking for exposure to copper. So quickly on the Osisko Gold royalties, we're very pleased to have this endorsement from the North American market following significant due diligence on the company and its projects. We've effectively sold a 1.1% royalty on this project for $15 million US, when the company's market capitalization was $80 million. So a strong look-through value of some $1.38 billion has been put to work. And more importantly, the terms on the Osisko royalties agreement meant that it has maintained a very competitive situation, with the company being able to use buyback rights to reduce this royalty if there is a change of control, and most importantly, no effective date of production is within this. So this is a very strong endorsement from Osisko and a fully risked investment on their side. And it speaks to the economics. Firstly, on the corporate overview, Rick and our long-standing shareholders will be very happy to see that we've not issued a share for 18 months and are unlikely to issue a share for some time to come in the company. We're covered in North America and Australia. We're trading on the TSXV and the OTC, and that will be very important when we approach financing on this project in 2026. We've systematically de-risked the project. We have permits in place that nearly most of our peers do not. Most importantly, water. 10 years to secure water rights to extract seawater from the ocean, secure the land access on the coast last year, the last connection to the central grid power station right next to us at Maintenancio last year. This project has basically had all of the hurdles removed in front of its application for a mining permit. It is at low altitude, and that low altitude has produced a very low capital hurdle. You see, the project does not have the additional $1 billion required for a large desalination plant or a high altitude pipeline, and that has what has delivered the lowest capital intensity project in the major copper space. When we look at the economics, and they were done at a very conservative $3.85 long-term price for copper, this is in line with 27 bank forecast, an 8% discount applied. We have very strong NPVs post-tax, IRRs which are still representative of a sector that looks like iron ore when iron ore was $20 a tonne. This is one of the few projects that has an NPV to start-up capital ratio above 1 in the large-scale copper space. But most importantly, this punches out a huge amount of metal. We are now the only 100,000 tonne per annum copper play in the Australian market in the producer, developer or explorer class, and we're one of only a handful of projects holding this much potential production of copper under its belt. So this puts out revenue at the moment on those price assumptions of around $850 million US a year. And so outside of the highlights put out of this project, metal production was key. Over 100,000 tonnes of annual copper equivalent production, and the only $10,000 per tonne on capital intensity number that you're going to see in the sector. Third fastest payback project, and very competitive cash costs in the second quartile at the moment. And with our strategy to upscale this project towards 150,000 tonne project, the opportunity to move this into the first quartile of cash cost for the sector. And that's very important in building a large-scale, multi-decade copper project. So when we look and we talk about alpha events, we've delivered a significant alpha event in the first time these economics have come together. But if we speak about beta, which is exposure to the underlying commodity price, your leverage to copper that this project provides, 85% of the revenue of metal, copper. If you're adding 50% to the copper price, that triples the NPV. That doubles the IRR. It puts the post-tax NPV at around $3.3 billion. So what does that mean in terms of a market metric? If you're trading at a 0.25 multiple to post-tax NPV, that is around a $10 or $11 share price for hot chili, which is currently trading at about $1.40 Australian. So moving on and looking at where this project sits in the peer space, and this is very important when you don't have many of these projects to feed this new copper supply over the next decade. Certainly not many that are not controlled by a major. We look to the largest, the 40,000 tonne plus plays. They're all sized in terms of bubbles. Some of them are lighter coloured because they need a bit more money on their resource drilling investment. We are now the lowest capital intensity out of the pure play copper developers in the world, with 82% measured in indicated resource base sitting at 927 million tonnes on the coastline. When we look at the all-important Profitability Index, this is a barometer for whether you invest in building something of this scale. That ratio of 1+, there are not many at this price copper that sit in this space. And this tells you a lot about what's going to happen, because without these projects, the world has no chance of delivering the copper supply to build the electric vehicles, the charging station infrastructure, and all of the solar and wind farms that the world is so desperately requiring to meet its decarbonisation effort. These are the type of ratios that large-scale iron ore projects enjoyed when iron ore was $20 a tonne. And I think that tells you more about the sector in general than the quality of the projects, because those higher copper prices are what will incentivise these large-scale projects into production to meet those requirements. Hot chili is well entrenched in the top 20 undeveloped copper projects by grade and scale, and the next steps in our growth are all about taking an opportunity to lift the resource and therefore lift the potential scale of this project into our pre-feasibility next year. Now we look at the valuation of hot chili, and this valuation gap has started to close. If you listened to me last year when we were talking about the pre-feasibility that was being invested in, 80% of it complete, on pause while we firstly demonstrate what the economics look like at a PEA basis, but using that information and take the opportunity to now secure an upscale strategy. But if we look at where the market values hot chili in comparison to its peers on metal in the ground, we always knew that we were 4 to 5 times undervalued. It's why we listed on the TSXV. It's why we're following the same footsteps that the last major copper developer from the ASX took, which was Equinox. But that valuation gap remains, and we're now starting to close it since we put this PEA out a few weeks ago. Now we can add, what do we trade at in terms of our proportion to NPV or PNAV basis if you're in the North American market? We're trading at a multiple of 0.07 compared to about a 0.25 multiple that these projects trade at. So those metrics are very key in terms of our first step to re-rating the valuation of the company, and that's underway. We're very pleased to see. But I also like to look at the actual physicals in the project. What makes this different? And if I was to take 2 key things that make it different, why is it so cheap to build? Why are the operating costs so competitive when we have a grade that's very much in line with average grades of these projects, and there's not many available? Why did we get such a low-cost, low-risk project? And it's about location. We are one of the largest projects at low altitude, and that is in our economics now. All of our peer projects mostly sit above the Andean snowline. But when we look into it more carefully about the de-risking on the project, what have we done that's different? We spent over a decade on our permitting. That's why we're a little different. We're just ahead of everybody in terms of de-risking. We're one of the only major projects that has a water license. And the last time I looked, water was really important if you want to process ore bodies. So these are the kind of things that stand in the way of projects in this space, large scale, being developed quickly. These are why these projects take 20 years to go from discovery to production, because permitting timelines in jurisdictions like Chile, where most of the world's copper comes from, are long and they're arduous. And the persistent companies, such as Hot Chili, that keep plying at this are the ones that eventually are the tortoise that overtakes the companies that want to move quickly and be a hare. So, what comes next? 26 million in the bank by the end of the day, or tomorrow likely. We kick off a major drilling program that looks to expand the Cortadera porphyry resource, which has quadrupled our resource base in the last few years. Drilling targets that are sensible. They might sit within a large-scale pit option that we're currently assessing, and we're looking to deliver in parallel with our resource upgrade at the end of the year. But also starting to drill some of our targets within our land holdings, such as Coroteo. Some exciting targets that we haven't talked about. We like to talk about discoveries after they're made, not beforehand, or else we'll be one of 2,000 companies that has immense potential. It's something you hear a lot of. We'd rather talk about things once they're in the bag. So we have a large investment on drilling that will be going forward. We have an upscale opportunity just by looking at the Cortadera resource, and rather than developing it as an open pit and underground, potentially we take it as a major pit, which automatically turns this mine life from 16 into 22, 23 years. And we also continue to pursue what we've always done well, which is further consolidation. We are trying to build the largest processing facility on the coastline of Chile in this location and offer the lowest cost to all of those ore bodies which are stranded, and eventually see a production hub of around 150,000 tonne per annum of copper production, probably closer towards 100,000 ounces of gold, and a 20 to 30 year mine life established. That is what Glencore has invested in. That is what Vision Osisko shares, and ultimately that is what will establish Hot Chili as the new king of the Australian market in the copper sector, alongside BHP Billiton. ESG has been a very, very strong focus. This is about making sure that the unknowns are controlled, that we always treat the local community and the environment first and foremost if we want to build a new mine. Building new mines is very, very hard, and it's getting harder. And if you don't take all of the ESG fundamentals first and foremost into your strategy, and have done it for 10 years to build that rapport with the community, to have invested in orphanages, to have supplied fresh water to the community, to have been an active corporate citizen in trying to add intergenerational wealth and ultimately bring in the community and the environment and the regulators and the government and all of our stakeholders into a partnership to effectively be part of the solution for the green transition. So if we look at our time frame to production, it is very, very set, very clear. We're currently taking an opportunity to upscale. We didn't need to do that. We could have raced to have this in production a year earlier, but who were we racing against? We're the only 100,000 tonne play that's first in line because of our permitting. We had another year up our sleeve. We intend to submit our EIA next year with our pre-feasibility, which has had most of the money spent on it, at an optimal scale. If we can do that, we may well have a first quartile cash cost project coming into production. And when you have those kind of economics, then a junior transitioning to a producer, is something that becomes achievable. We're planning to have this in finance decision in 26. We're planning to have this in production between 2028 and 2030 to be realistic. I could stand here and say that nothing is going to go wrong and everything will go perfect on a timeline, but we all know that that's not true. 2028, this will be in production at the earliest, but certainly before the end of the decade, along with the next wave of major copper producers to add to supply. So thank you very much, and hopefully some of you may join me in our breakout session where we might talk about very exciting things within our portfolio, including a potential water business that Hot Chili controls through those licenses and 10 years of effort towards producing assets that sit within our portfolio that may not be appreciated. So thank you very much, and look forward to speaking again next year.